looks like it's a 1 in 10 possibility of this scenario happening. So not likely, but definitely there. I mean, it's a 10% chance that it could happen, which is enough to put a plan in place.
Prepared for it.
For sure. So,
welcome to Loans Elevated, the podcast that brings you the latest industry news, expert interviews, and insightful discussions that will help you stay ahead in this dynamic market. I'm your host, Brock Lassick, and I've spent years in the trenches of the mortgage industry, helping individuals and businesses navigate the complex landscape of real estate financing.
I'm your co-host, TJ Heidenreich, and together, we'll cover a wide range of topics, from business strategies that skyrocket your success to mindset and motivation that fuel your growth.
okay, welcome back to another episode of the Loans Elevated podcast. Before we start, of course, please like, subscribe, share, do whatever you can. It helps us a ton. But let's dive into it. What we're talking about today is the financial fire drill. This is a blog post that Brock actually just posted on our website. And I think it spurred from, if I'm remembering right, a conversation that we had amongst ourselves, a month ago or something like that. Yeah. I mean, obviously we're in somewhat of an economic storm right now. There's a lot of uncertainty. We're feeling it at the consumer level. We're feeling it at our level. Everyone's kind of like, where are we going, right? And how Brock had, and we'll talk about the actual article. That's what we're going to be going into detail in. But I think what helps put the mind at ease in these situations where there's a ton of uncertainty is actually going through worst case scenario. So this is exactly what the blog post is really running through a financial fire drill. Are you prepared for the worst case scenario? What does that look like? And if you're not, what do you need to work on, considering, like, let's say it's going to happen within the next 90 days? Is there anything that you could change now to be more prepared? I
think I see two different types of people, just because we see so many different people's finances and how they live life, what debts they have. You either have the ultra conservative person that has a plan that
they're always planning for the worst,
always like doomsday.
Yeah.
And maybe they are a little bit too conservative with finances, and this is just me throwing this out there. And then you've got people on the opposite end that they've got
not a care in the world.
Borderline reckless behavior with their finances, and they treat it like, if I don't look into it, it will fix itself. Or if I just ignore it.
If I avoid it, it's going to go away.
Mm-hmm. Which also doesn't work.
Right. Or there's just no thought, even in general. Like, they get a paycheck and they spend it, and then they rack up credit cards and like whatever money is available, I'm going to spend it. Like, that's just how
I think of it roll. like back in school, like a literal fire drill. When it's December in Utah and it's cold outside. Last thing you want to do is do a fire drill. You still have to do it. It's mandatory. You have to know your procedures on if stuff goes wrong, how you can fix it, and what the procedure you have to take. And this is the same thing here.
And it's not that you're hoping it happens, but
no.
If, like in school, like if those fire drills never took place, and let's be honest, it probably wouldn't play out exactly how they do in the fire drill. It never really does. But the thing is you're going to take a couple extra steps that might mean you surviving or not in an emergency. It's the same situation financially. I mean, if you're trying to avoid bankruptcy, staying off the streets, and just worst case financial situations, you've got to have some sort of plan in play.
And I think it helps for both sides. I think it helps for the ultra conservative people too, that with their finances, that they can, loosen the reins a little bit. You can enjoy life a little bit more. You've got a plan if an emergency strikes. That way you can enjoy life.
Because oftentimes they're super conservative, and they don't even ask themselves the question as to why. It's probably trauma-based, or, maybe seeing the way parents handled money, or a friend or a family member or someone. And it's built and instilled into them to be super conservative with their finances, and they don't ask, like, why am I actually doing this? So this can help you. Like, the thing is, I think being conservative is great to an extent. Planning for the worst. You should plan for the worst, but optimize for the best. And if you're continually just planning for the worst, you're going to miss out on opportunities that can actually bring you more wealth, more money, put you in a better financial position, which is honestly the reason why you're being conservative in the first place. So having a plan in place, like you said, can help both sides.
Yeah, exactly.
Think about worst case, conservative people, okay, worst case, I'm good there. All right, now I can get a little more aggressive with my money. maybe I can take an extra vacation a year. Maybe I can go buy the thing that I've been wanting to buy, or maybe I could take advantage of this crazy risky investment.
Yeah.
And for the people, the big spenders, avoiding the problem is not, like TJ said, it's not going to make it go away. If you're
Just compounds.
if you're one paycheck away from missing all your payments, that is a problem, and it should be fixed as soon as you can. Obviously, there are circumstances it can be difficult. I'm not saying it's easy. I don't want to sound like I'm being ignorant or not in touch, but you shouldn't just ignore it. There should be some sort of shift in the way that you look at things, and that's kind of the point of this blog post and what we had discussed.
Yeah.
Is, okay, well, let's prep for the worst.
Yeah, and it's funny, while you guys were talking about it, I actually wasn't involved in the conversation. I was on vacation, but I was having the same emotions that you guys were having because the market was so volatile. I couldn't even enjoy the vacation for that day because I saw the market notifications. I was getting texts from my clients. I was worried for my clients. I was worried that, we need to be as proactive as possible to make sure they're all prepared. Which I think this is perfect timing. Going into just a volatile economy with ups and downs, even in the same day, you need to be prepared.
Yeah, if you wait for the emergency to be here, it's too late. So that's the point here. Okay, so I think where we could start is the what if questions. So really, this is what you can ask yourself, like, what if there was a global slowdown, causes incomes to drop dramatically or disappear completely for you or most people? What if the stock market crashes by 50% or more, which if you have retirement accounts, crushing those, investment portfolios obviously losing half or more of their values, which is a big problem. You can't sell because the losses are too steep. The markets become illiquid, which will happen in that big of a crash. And the banks shut off access to your lines of credit because they can't even afford the take on of the debt. All liquidity essentially dries up in these cases. So banks freeze HELOCs, cancel business credit lines, things like that. So you're left with limited income, no liquidity, no access to credit. And of course you have a family that's depending on you, and you've got to keep moving forward. You can't just end up on the street. That's kind of to set the stage. And I'm not saying that this is like super likely of happening.
No.
But I think it looks like Brock here had did a bit of a study, so I'm leaning on him and trusting him, but it looks like it's a 1 in 10 possibility of this scenario happening. So not likely, but definitely there. I mean, it's a 10% chance that it could happen, which is enough to put a plan in place.
Prepared for it.
For sure. So the questions are like, if that happened, could you survive? What would you need to do? How would you respond? What could you scramble to ultimately stay afloat? So that kind of sets the stage. Now, what other thoughts do you have with that before we dive into the questions that you should be asking yourself to prepare for these scenarios?
Yeah, I think that this is something you can't do alone either. If this is something that your finances, I feel, if you're married or have a partner, this is something that should be an open conversation with your partner. It shouldn't be a taboo subject. And this is something that you should look at on a frequent basis. Even if it's just a quick little run over while you're doing the budget together on a monthly basis, that's completely fine. But and I want to run over these questions one more time. What if your income dropped by 50% tomorrow? How would you react? What would you do? Could you stay afloat? Do you have enough money in reserves to get you by for 6 months, a year, 3 months? What does that look like? If the market crashed.
And these were the questions I was hoping to jump into. So you're just, cool. You're jumping right into it.
Okay, sweet.
Just so you know.
Sweet, perfect. What assets could you actually access quickly? Because
think most things become illiquid. So access quickly, like we're talking cash that maybe is sitting under a mattress in a safe, or ideally money that's sitting in a money market account or some sort of liquid savings account.
Gold,
yes,
yeah, valuable.
That is valuable in these times. So any hard assets, gold, silver, any precious metals, things like that. Ammo, things. I mean, just tangible, quick assets. Like, what do you have? And if you don't have much, it should tell you where you need to go going forward.
Yeah, and I think it's always healthy to diversify. I mean, even you and I had conversations earlier this year about precious metals.
Yeah.
because it's something that we had never looked into, or
Right.
like, and is it something that interests you, or is it something that long-term doesn't make sense?
Mhm.
Let's see here. Knowing your budget. What's your monthly essential burn rate? Food, housing, insurance, utilities. What's like your absolute survival number? Do you know
If
what
I were
that
to
is?
throw out a bet, by the way, I bet you only 50% of people know this, maybe less.
Oh, for sure. I mean, dude, I didn't for the longest time. And then when I did it, I was forced to by a coaching program, which I didn't
Yeah.
really want to come to realization. But when I did, I was like, damn,
Shit, I'm spending a lot of money.
yeah, I'm spending
Yeah.
way more than I should be on a,
Yeah.
which is always a good come to Jesus. Like, okay, what can we do to lower this monthly number? That way, if disaster strikes, we can still make it.
Yeah, or it's like, why am I even spending the money on this? It's not
Mhm.
even, I didn't even know it was costing that much.
Exactly.
A Starbucks coffee every day, $5 a day.
Yeah.
Add it up. I mean,
Yep.
look at your burn number if you're doing it. That's a big difference in a monthly budget.
Yeah. How long could you sustain your lifestyle with with no new income? Again, going back to the reserves, what do you have in reserves?
Yeah.
What expenses could you cut immediately? Going back to your survival number, how many
Yeah.
subscriptions are you signed up for that you could cut right then and there, and how much is that going to save you?
Yeah, which, by the way, to go back to that last question, how long could we sustain our lifestyle with no new income or your reserves? The recommendation is 6 months. I say it's anywhere between 6 to 12, depending on your income style. I mean, and, I lean a little bit more on the side of conservative myself. I like to have close to a year, but my income's a lot more variable than most. So, I mean, I would say 6 months is a minimum. But, I mean, you've got to have some sort of number there. You have to have some sort of nest egg or reserve.
Yeah, agreed.
And if you don't, you need to go back to number 3, which is your monthly burn rate, and see where you can cut down to ultimately put that money into savings so you do actually have a nest egg.
Does your home and auto insurance seem to go up every year without fail? Mine did too. I thought this was just the way the insurance industry worked until I found my friend Alan Johnson with American Family Insurance. After more than 15 years with the same insurance agent, he saved me over $3,000 per year when I switched. I refer all my family, friends, and clients to him, and their experience is similar. Great rates and a great experience. Call Alan for a free quote today at 801-708-2962.
Anyways, back to 5. What expenses could we cut immediately? I guess I
Same
just
thing.
hit on that.
Yeah.
So I'm sure there's 20% of your monthly expenses. I'm sure you could cut immediately today and not really notice a big difference in your life.
Yeah, I agree with that. Number 6, what are our backup plans for cash flow or credit, and how reliable are they?
Yeah. So think like credit cards.
Mm-hmm.
Worst case, if you ran out of liquidity, your savings are gone. Obviously don't want to advocate for this, but do you have a credit card with a big, well-known credit card company that should survive financial storms like this, where you could maybe use a line of credit as a backup? Home equity lines of credit, obviously there's risk there of those being frozen in these times. But you just go through any and all options that you have and do some research on how reliable they are through economic storms and see how their financials look. It's all public data. I mean, you can these companies have to publish how they're performing financially. Make sure it's an accredited company so you can rely on the credit if disaster happens. Backup plans for cash flow. I mean,
Yeah,
you can sell stuff.
Yeah,
You
So,
can
what
literally-
assets do you have that you can sell?
Yeah.
That would be tangible. And what else we have to consider is like, okay, because when we were running through our personal fire drill, if you have luxury goods or items that you think you can sell, odds are the rest of the world is also is hurting as well. Maybe they can't qualify to buy whatever you're selling. So at that point, is
Or
it
maybe
really
they're
an asset?
selling a bunch of their stuff too,
Exactly, and the
there's
value
just-
of yours
yeah.
is taking a huge hit. So is that really an asset? That's like
Not
the
really.
questions you have to ask yourself.
Yep. Also, like if you have rental income that you're not really using right now to spend, like analyze is your tenant that's in your rental property right now a reliable tenant? Can you actually rely on that in these cases, considering we're in an economic storm? And I would just go through a hierarchy of like what you could rely on from top to bottom.
Yeah, and this sounds pretty doom and gloom, but you guys, this is worst case scenario. We're talking this fire drill. It's a fire drill for a reason. You're never in very rarely are you in a fire, but you need to be prepared if one pops up.
Yep.
Number 7, where are we assuming too much stability? Again, is that in some of these assets? That
where are you thinking you're just over optimistic? Like it will always be accessible. Mm-hmm. It'll always hold its value.
Some jobs like, oh, my occupation is the most stable thing ever. It will never change.
Right.
Okay,
let's probably not true.
Take a step back outside of your position. Let's really look at this. Where are the gaps?
Mm-hmm. Number 8, what would we do differently if this scenario, and you knew this scenario was 90 days away? And maybe, like, here's the thing. Maybe if you don't know your burn rate, if you don't have 6 months of expenses saved up, that's what you could immediately start doing. If everyone should treat it as if it was 90 days away. If you're listening to the podcast,
yeah,
go through the question with your family, and if it was 90 days away, what could you cut out now?
Yeah,
get yourself in a better spot, and then if it doesn't happen, great. Then you've set up so many financial backstops that you can eliminate all the fears, go back out to living life again.
No, it's so true.
Because the thing is, you do have to live life. We all know that.
Mm-hmm. Yeah, there's a healthy balance.
Yeah.
Number 9. And last one, are you emotionally prepared to lead through that kind of storm?
Mm-hmm. Well, I could say right now, if you don't have this conversation or you don't have some sort of financial backstop set up within your family and it comes, there's a reason why finances drive divorce rates as high as they do. If you don't have the conversation with your spouse or your family.
No, you need to act as a team.
You go into this situation unprepared. You probably won't only lose like all of your assets and things like that. You may be risking relationships, marriage. Mm-hmm. Like it's more than just a physical thing. I think it's an emotional relationship thing that you need to prioritize as well.
Yeah.
Being on the same page money-wise with this spouse or whoever you're deciding to coexist with is a big deal.
I'm going to put you on the spot here, and you don't have to answer this. Has there ever been a time in our industry that you felt that you've had to put some of these into play, the financial fire drill?
Oh, yeah. Yeah. I do it every month now.
Yeah.
Pretty much. Reviewing budget, and there's times where, like, I get super low paychecks or no paychecks. Yeah. And I'm like, shit, if this goes for 3 months,
yeah,
I'm going to be hurting.
Yeah, you're going to be dipping into savings you didn't want to touch.
And then I look at the burn rate, and I'm like, okay, how much do I have right now? All right, well, I only have 7-8 months of reserves left over. Like, is that enough to last me, especially in this industry? Yeah, I answer these questions all the time.
Yeah, and
sometimes they're more applicable and relevant than other times. Like just because we live in such a volatile industry, especially the last 5 years.
Yeah, I got in the industry in 2018. And I saw the rise of the housing market doing extraordinary well. Best appreciation we had seen ever.
Yeah.
Rates falling dramatically in 2020. And then I remember, of course, and you have everyone, especially they're like, okay, well, get all the goods while the going's good, right? Get all the refunds, get it all going. And I remember okay, that's not how I run the business. I run my business based off being an advisor for my clients through thick and through thin on a purchase-based business. Of course, I want to help with every situation, any refinance we can. And then I do remember that fear and my emotional stability going down, beginning, middle of when we first started working together, 2022.
Yeah.
Because I think rates jumped quicker than I expected, which that was such a hurt to my emotional well-being at the time. And it wasn't even a huge financial burden, honestly. In fact, you and we did better through 2022 and 2023 than we had ever done before. Mm-hmm. And it was because we zigged while other people zagged. We knew that people were going through it with these higher interest rates, and we were able to best advise our clients. But that's what it takes. It takes not to pat ourselves on the back, but it takes the wherewithal to know, hey, I'm not doing good emotionally, and if I just sit here and wallow in it, it's not gonna serve me any better.
Well, generally, I feel like there are signs that happen. Like there's little emergencies that come up expense wise that might remind you, like, you know, that kind of stuff piled up in like a quick time frame could really put me in a bind. And I would say, like, while 2022, obviously we dug in our heels, we knew what we were getting into, knew we had to just go to work, no other option. The last 6 months of the year, I only made like 10% of my income that entire year of 2022.
Yeah.
So I made like almost no money the last 6 months. And that was one of those moments for me. I was like, dude, if I go another 6 months like this,
But you didn't stop working.
I didn't stop working,
In
but I
fact, we
did
put
start to
in-
put in like better plans and stuff financially.
In fact, you and I put in longer hours. We were going through, not only were we going through one of the weirdest times in mortgage history with what rates we're doing, but also we were going through an office build out. We were spending thousands of dollars on a new office. So Ryan and I were sharing about a 4x4 closet.
So like those, you'll have those moments. And if you choose to actually acknowledge them, they can be good lessons and good points for you to actually set these backstops in, and hope maybe this podcast can be that for you.
Yeah, for sure.
But don't ignore them. I mean, don't ignore this. It can happen really at any point. You have to be somewhat prepared for it. And if you did your best and it still happened, I mean, you can at least say you tried.
Yeah, no.
And you could survive 100%. A little bit longer than the next guy.
100%.
So,
I mean, guys, again, this is not meant to be doom and gloom, scare you. This is just 100% fire drill to be prepared for worst case scenario.
Yeah.
So we'll post these questions in the description, but ask yourself this. Go through this on a date night with your partner. Really fun.
Well, and then if you're in a good spot, then go out and spend like crazy.
Yeah,
or
exactly.
invest like crazy. That's the nice thing.
Exactly.
So I think it'll bring you more happiness.
Yeah. It's knowing where you're at and where you're headed.
Yeah,
that's the main goal here.
Cool.
So, awesome, guys. I hope you enjoyed this. And again, if you could give us a thumbs up, like, subscribe, all the things, whatever platform you're on, do whatever you can do to help us out. We really appreciate it. Anyways, we'll catch you on the next one. Thank you for tuning in. For more industry insights, follow us on all platforms at Loans Elevated.
And to get in touch with our team, call or text 801-713-4000 or visit loanselevated.com.